All right, welcome back to Talk Tickers, the show where we slice and dice the earnings calls moving your portfolio. Today, we're jumping into Atlantic Union Bank, ticker AUB. They just dropped their Q4 2025 numbers, and wow, the stock definitely took notice. Let's get right into why. So, let's just cut to the chase. The one number that tells you almost everything you need to know about this quarter, it's this: a massive 12.8% beat on adjusted earnings per share. I mean, that's the kind of number that makes Wall Street sit up and pay attention, and they absolutely did.
So yeah, let's break that down. This headline beat really shows they were a clear outperformer.
Okay, check out the raw numbers here. The street was looking for about 86 cents a share. AUB comes in hot at 97 cents. That's an 11-cent beat. And it's not just on the bottom line. Look at the revenue. They blew past expectations by nearly 13 million bucks. You know, these aren't just good numbers. This is the sign of a really, really well-run machine. And if you're wondering how that translates to the stock price, well, take a look at this. Over the past month, AUB is up almost 7%. Now here's the kicker. Compare that to the rest of the neighborhood. The regional bank index, KRE, barely moving. The whole financial sector, XLF, even less. AUB is just leaving them in the dust. It's clear the market was betting on a strong report. And boy, did AUB deliver. So the big question is, how did they pull this off? Well, it wasn't just luck. This all ties back to a really smart strategy, one that the pros are calling the scale plus spread story. Scale plus spread, what does that even mean? Okay, think of it this way. Scale is all about getting bigger, in their case by buying other banks, like they did with Sandy Spring. Spread is about getting more profitable on the business you already have, right? Squeezing more juice out of every loan and deposit. And Atlantic Union, they've managed to nail both. They got bigger and they got more profitable at the same time. That's the magic formula right there. And you want proof? Here it is, 3.96%. That's their net interest margin, or NIM. It's basically the core measure of a bank's profitability, and it went up by 13 basis points. Now, I know basis points sounds tiny, but trust me, in the banking world, a 13-point jump in one quarter is huge. It's like a home run, especially when a lot of their competitors are seeing those margins get squeezed. So how'd they do it? What's the secret sauce for that amazing margin growth? Well, it's a few things working together. First, that Sandy Spring deal gave them the size, the scale they needed. At the same time, the cost to get deposits, their funding, got cheaper. Then they put that money to work with really strong loan growth, over 6%. And the best part, they did all this without taking on risky loans. Their credit quality is rock solid. It's just textbook execution. Okay, so that was Q4, a fantastic quarter. But what about next year? Let's check out what management is guiding for in 2026. And just look at this guidance. They're basically telling the world, hey, that great quarter wasn't a fluke. They expect their net interest margin to stay strong right around that 3.94% mark. They're projecting more growth in both loans and deposits, and they're going to keep expenses under control. What this tells me is that management is super confident. They believe this momentum is sustainable, which is exactly what investors want to hear. All right, after the main presentation, the analysts get to ask questions, and the Q&A session was pretty revealing. Let's hit the key themes. Okay, the big takeaway from the Q&A is this: the story is shifting. For a while, it was all about integrating that big Sandy Spring acquisition. Now, it's all about growing the business from the inside out, what we call organic growth. They're seeing strong demand for loans, their move into North Carolina is going well, but here's the real nugget for investors. They hinted that share buybacks could start up again in the second half of 2026. That is a massive vote of confidence and a great way to return cash to shareholders. Okay, so let's put it all together. We've got a killer quarter, a really confident outlook from the team, and some very bullish comments. It's time for the big finale, the next call, and our official rating. So, the million-dollar question: what's our call on AUB? When you look at how well they're executing and what they're promising for 2026, we see a clear path for this stock to hit the mid-40s. And we're not alone here. The street is catching on. TD Cowen just bumped their target to 46 bucks. If AUB just keeps doing what they're doing, that price seems totally reasonable, if not a little conservative. So, with all that said, our official rating is a solid outperform. We think Atlantic Union is set up to beat the market and its competitors over the next year. But wait, we're not done just yet. For those of you who like a little more action, we've got a speculative trade idea to cap things off. Okay, remember that hint about share buybacks coming in the second half of 26? That's a huge potential catalyst. As we get closer to that date, the market's going to start getting excited and pricing it in. So one way to play this, and again, this is speculative, is to look at long-dated call options. If you buy calls that expire late in the year or even next year, you could get some serious upside leverage as that buyback story starts to really take hold and push the stock higher. And, of course, we have to say it. This is not financial advice. You've got to do your own homework. Thanks for tuning in to Talk Tickers.